Hi, this is Vijay, and you're watching Focus and Blur channel. Now, many of you might have seen my last week's video. It was about thumb rules for share trading. Now, I could not fit all the thumb rules in that one video because it was already going beyond 10 minutes. So I thought it's better to have a sequel to that video. So in this video, I will try to cover all the remaining major thumb rules as such, and hopefully this will be much shorter compared to the last one. So let's jump in. If you are bemused by the title, then let me explain. Now, many people have this strategy called buy and hold, where they buy some stocks and hold on to those stocks for a long time. And then they ride out the storms such as recession, depression, war, etc. I believe this is inherently a bit riskier strategy. So, whenever you are buying a stock, you have certain expectation in mind. For example, I will gain 3%, 5%, 7%, 10%. Now, if your stock price has risen to that level, then I believe it's better to sell that stock right then. So there is no point in holding on to the stock and saying, my precious, my precious. Okay, you're not wedded to that stock. So it's not a long term commitment. You have entered into a business transaction, you have gotten the gains that you had wanted, and it's time to sell. So just remember that every stock is sellable, and you should sell that stock when the time is right and when you have gotten the gains that you had expected. Now, the strategy that I use is called swing trading. Now, what's the meaning of that? Right. So, whenever you buy a stock, you need to have certain expectation in mind. For example, let's say you buy a stock at 100 rupees. Now, I'm going to sell this stock after, let's say, 103, 105, when the price goes to, let's say, 110. So, whenever the price reaches 110, you should sell that stock. Right? You should not hold on to the stock for a long time, expecting that eventually it will go to 200, 300, like that. So whenever you are making these small gains, you should sell your stocks. That's essentially swing trading. Now, what's the benefit of that? The benefit is that you are reducing your risk, because as I said in my previous video, you do not control the company. You do not control the industry that the company is in. You do not control the share market, and you do not control the world economy. So it's better to book your profits whenever you can. Now, the another benefit of this strategy is that you get your money back rather quickly. So you can reinvest that money. So let's say a stock goes from 100 to 107 in, let's say, 30 days. Okay, so you have made 7% profit in 30 days, in a month. So I'm not saying you will be able to do that every month, but even if you are able to do that, let's say, three times a year, still you have made 21%. Right? So it's not a bad deal. So the strategy is to book smaller profits, book profits whenever you can. Some I have booked profits even for 1%, 2%. Because if you believe that the stock is not gonna go further up and it's gonna rather go down after this, then it's better to book that 1%, 2% as well. Now, another advantage of swing strategy is that you can deploy it whether it's recession or whether it's high growth time. For example, let's say there is a recession going on. So you buy a stock at 200 rupees, and the stock wobbles. Eventually, you are able to sell it at, let's say, 205. So you are made 2.5%. Now, let's say the growth picks up. Now you are able to buy the stock at 300 rupees. And then let's say you sell it at 309. So you make 3% again. So you can use this strategy whether it's recession or whether it's high growth cycle, right? So it doesn't matter much. The only delta is that, okay, so the buying price may vary and the amount that you have to invest may vary a bit, but the outcome might be similar. So you're not that dependent upon uh, the economic cycle as such, whether it's a recession or whether it's high growth. Now, whenever you are buying a stock, you should buy in steps. Let's say you like a company, the stock price has fallen down a bit, you think it's the right time to invest. So you buy the stock at, let's say, 500 rupees. Now, there are uh, three possibilities, but most of the time there are only two possibilities. Either the stock is going to go up or down. Now there is a very low probability that the stock remains at 500. So let's say the first scenario is that the stock price goes up immediately, right? So let's say you make 3%, 5%, you sell it. That's a good outcome. You have made 3, 5%, and then you are ready to reinvest. Then there is another scenario that the stock price goes down. So okay, you have bought at 500, then the stock price keeps going down and down and down. So let's say you buy at 450, then you buy at 400, right? So eventually, hopefully, the stock price will start rising again, and then at that time you can decide whether you want to buy again. For example, if it starts rising from 400, you can again buy when it reaches 450. Then when it reaches 500, you can buy some if you want, and then you can eventually sell it. So what I'm trying to say here is that don't put all your money in one go, right? You never know what's going to happen. And it's okay if you just put in a small amount and you take it out after 3%. That's fine. Then we can call it as a single, right? So every time you're not going to hit fours and sixes. So it's okay to have these singles. Now, next one is something that you might have heard before. It's called don't catch a falling knife. Now, let's say you want to buy a particular company stock and the price is going down, down, down. Then I would say don't rush in immediately and buy the stock when the price is maybe down by 3%. Okay. Let it go a bit further down and just wait for a while. I remember that movie scene from Braveheart where Mel Gibson is yelling, hold, hold, hold. Essentially, it's the same thing. You have to wait, 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 and eventually when you believe that the dust has settled, and then you can buy the stock. In this section, I'm going to go over some of the tips that beginners can find useful. Now, first one is shadow trading. So let's say you are ready and you are ready to buy your first stock, then I would suggest don't buy it. What do you mean by that? So just imagine that you have bought that stock. Okay, so let's say you like a particular company and you want to buy, let's say, 100 shares of that company. So you just note it down. You don't actually buy it. You just note it down in a file saying, okay, today I have bought 100 shares of this company at this price. Okay, then you can track this stock, how, whether it's going up or down. And let's say after 2 months or 1 month, the stock has risen by 5%. And then you can say, okay, today I'm going to sell the stock, and you note that down again in a file. And if you do this for, let's say, 4 or 5 stocks, then you will gain enough confidence that, okay, I'm actually ready for the real market, right? So what I would suggest is it's really helpful if you do this shadow trading. I did this as well before I bought my first stock. My friend had watched the last week's video and he had suggested one, and that's don't become sheep. So essentially, what that means is that don't buy the stock just because somebody else is buying it or your friends are buying it. You need to have your own logic behind buying and selling that stock. So, and one caveat I would like to add is that this can become addictive. So I remember that when I was in California, I used to wake up and the first thing I would do is, you know, open the share trading platform and see where the stocks were. So you have to be a bit wary of that. So that's all I had with respect to thumb rules. I want to say again that I am not a government approved investment advisor. Okay, so whatever I am saying in these two videos is that whatever I have learned over the past 14 years. So use your own brain, listen to what I'm saying, but that doesn't mean you have to follow all these thumb rules, that you have to use your own brain. Okay. So that's all I had. If you like this video, then do share and subscribe. That's all. Thanks.